10-year note yields moved higher today when the Fed gave us the notorious hawkish cut. Yes, they cut 25 basis points today. However, future cut expectations came off the table. We saw 10-year note yields move higher, actually getting north of 4.5% for the first time since Memorial Day, as yields were up almost 12 basis points on the session. So a big move after the Fed. The Fed came out and said inflation remains elevated, and likewise, the economy is starting to get its sea legs under it, which means that those rate cuts that were previously priced in for first quarter and beyond have come off the table. Now we're seeing about 25 to 50 basis points of cuts in 2025 alone. That in itself saw the dollar bid. We saw yields bid, as I said, and 10-year note yields getting north of 4.5% for the first time since May. Today closing up 12 basis points. Now, what does this mean for volatility? Well, check out that CVol index over at cmegroup.com. And as we mentioned earlier in the week, volatility has been simmering and slowly moving higher since bottoming out last Wednesday. Well, today we saw an even bigger move higher, despite the fact that we got past a key event. Typically, when we move through these big events, whether it be FOMC or a Fed speaker or a non-farm payroll, volatility typically declines as we are through the event. Well, today we saw volatility moving higher after the event as uncertainty continues and the market seeks clarity, which it did not get today. Now let's talk about what we have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims numbers. We also get Philly Fed. We get some housing data. But really, the market will be focused on that post-FOMC trade. What happens in the first 24 hours after the Fed meeting, after the rate cut, and after future rate cuts seemingly have been taken off the table. So midweek, we see yields continuing to move higher. After FOMC, they move even more, getting north of 4.5%, up 12 basis points on the session. Ahead of tomorrow's claims, Philly Fed, housing data, and that post-FOMC trade.